This is a Stock Trading Reality Podcast, episode 157.
I currently have 11 things I'm trading. 6 of them are down, so I'm a loser. But I'm up $818 today. See how it works? Like you said, you got to be a good loser.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. He's met someone from Serbia and Macedonia in the same night. Clay Trader.
Yes, that is right, and I still kind of walk around with a little bit of glow of ego surrounding me. But I mean, how many people can say that they've shook hands with somebody from Serbia and Macedonia in the same night? I mean, be honest. Did you even know Macedonia is a country? I always thought it was just like some city or something, but it's actually a country, and I have met somebody from there, and I shook her hand, and she was extremely nice, and she was, it was a good experience, and her boyfriend was from Serbia, hung out with him. So, Ches, who is our esteemed co-host, a couple questions for you. First, did you know that Macedonia was a country?
I did.
You did. So
sorry to burst that bubble. Yes, I did.
So you didn't think it was like a city, or I always thought it was a city over in Eastern Europe. Okay.
I'm not sure why I knew it was a country. I've just known it's a country.
Okay. And then second, did you meet Z at the Florida meetup?
Of course I met Z.
So then that means
I absolutely met Z.
Then that means that I would assume you met, I can't remember her. Do you remember her name?
No, I don't. I'm not the best with names at all, but I do remember Z. That's an easy one for me to remember.
Yeah, but I'm assuming you shook their hands also?
Of course. So I did.
Hey,
I guess I'm part of the fun fact too. Yep. Who would have thought as a podcast host and a co-host?
Literally. Both of us did it on the exact same night too. It's not like different times in our life, on the exact same night. But Z, he was a good guy,
That's
wasn't
true. He was an awesome guy.
Yeah. We I think he's going to come out to Denver too. Sounds like he's trying to make that happen. But I
love to see all the world travelers we have in our community.
Yeah, it's crazy. But I don't want to talk too much about Z because he's going to come on a podcast. But let me just say he's another one of those guys where it's like, you got an excuse, don't want to hear it. And Z is going to be a future data point when we get him on here. But little context for those listeners out there with the claytrader.com community. Once in a while we'll do meetups, different points around the country. And we relatively recently had one at the time of this recording down in Fort Lauderdale, Florida. So that is where I met these people. We had right around 40 people show up, and it was a great time. And we're going to be doing one in Denver, Colorado on June 1st. So I'm not sure when this is going to air, but if it's not June 1st yet and you want to come hang out with Ches and I, then just join up the inner circle, get to know us. And if we don't seem like creeps, then you're more than welcome to come hang out with us in Denver. And I haven't done this in forever, but I want to quickly touch on this because I've had a few questions and comments. But what is the history of this podcast? Well, the history is it was originally intended for inner circle members only, meaning we could just, Ches and I would talk with people. We'd share it with just the private community, hopefully inspire, hopefully just kind of help other people out so that others can hear their stories. And then long story short, it came to kind of the decision of, well, why don't we'll only keep the guest inner circle guest. We'll keep it that way, but we'll just open it up to the public because that allows more people to hopefully benefit from it. So that is the history there of why, because, some people, why do you only have inner circle guests? Well, that's why, because it was originally only ever going to be for the private community itself. So just wanted to quickly tackle that. I've been meaning to do that every 5 or 6 podcasts, but I totally slack off on the history lesson there. But anyways, with that out of the way, we have a great guest today in Dan, and I guess I don't want to let that spoiler out of the way. We'll let that organically happen. But he's royalty, and you'll see what I mean by royalty as the interview unfolds. But a pretty unique twist in the sense of Dan is a big fan of fundamentals, and although Ches and I don't use fundamentals as our driving force behind our trading and such, Ches and I both also admit that there's many ways up the profit mountain in the world of the markets. So it's not like we're judging or anything, but we make some great discussions. Dan actually presses our buttons quite a bit. And I feel bad because I go on quite a few rants. And I mean, Dan talks.
As do I.
What's that?
I said, as do I. He gets me ranting on some things as well, but no, just, and it's more than just trading as well. So you guys are really going to enjoy this one.
Exactly. Good point. And so yeah, it's Dan's fault though. Just understand that because he starts pressing our buttons with these certain topics and gets Ches and I going. But yeah, good stuff. A good, unique viewpoint on things. So without further ado, let's hear from this piece of. No, he's not a piece. This person of royalty, Dan. Dan, welcome to the show.
Hey, thank you. Welcome. Thank you, Clay and Ches. Nice to see you guys. Nice to hear you.
Yeah, I was going to say, we're hearing each. We can almost maybe see each other because you're on the other side of the state from me, right over on the east side of Michigan.
Yep, we're over in Monroe. It's actually almost 60 degrees today. We're having a nice winter day here.
And it's, I'm guessing, rainy?
It was earlier. It's just, a little bit rain, but we can take that, right?
Yeah, no, I'm not complaining. Over on the west side, it's been west side of the state. That is, it's been warm for sure, but it's been raining since basically yesterday late afternoon. So I don't know. We might have to build ourselves an ark or something. But we're managing so far. Now I don't, Ches. I guess I don't want to speak for the both of us. I'm not too familiar with Dan other than a couple emails that he sent. Have you had any interactions with Dan?
I do not believe so.
Okay, so this is good. We're going to have the true spirit of the podcast here where it's just, three people sitting down and getting to know one another and then talking, trading and such as we go.
You bet.
So I know, just like I said, Dan has sent me a couple emails, but besides that, I've know very, very little, so I am very excited for this. So let's start right at the get-go here. What got you interested in the markets? Where did you kind of hear about them? And then what eventually, unfolded that got you interested enough to decide that you wanted to kind of take matters into your own hands and get more active within the market?
Actually, Clay, it was, I was like anybody else. I went and graduated high school, went to college. I wanted to be a policeman, so I got a job as a police officer locally here in Canton, Michigan. And I didn't really think much about investing. I didn't think much about what I was going to do with my future as far as finances. I was a young person and just, living life. And one day I went to my mailbox at work, and there was a statement there from the Principal Financial Group. And I opened it up, and there was a, 5-figure balance, and I've never had money like that in my life, and that just sparked me. You know what I mean?
So did was this a sign that you're going to start just taking it into your own hands and dealing with it yourself, or were you thinking play it safe, put it in mutual funds, something to just let it work for you?
At that time, I was interested in manipulating what was in that account, and I did that for a long time. And I think the first chapter, if you will, of any kind of talk about wealth creation should start with how to save, right?
Oh, absolutely. And I guess, well, Clay, I was gonna ask more questions, but on the topic of saving, you are the saving master here. So yes, you absolutely nailed it. Without having that, you're just borrowing stuff. And how often do we see people go down the rabbit hole of borrowing money to get into the wealth creation and it going sideways? So yeah.
Yeah, because like Clay has said many times, there's a lot of emotions involved in borrowing. It's powerful to save money. It's discipline. It teaches you stuff. So I kind of started there. I had a side account that I had continually saved money in and forced myself not to touch. So I kind of did that for a very long time. And I started to develop. Go ahead.
I was going to say, I want to loop back into something you said that, you wanted to use this money yourself to manipulate it to kind of make wealth and that you were in control of it for a long time. So what do you mean, though, when you were in control of it? What exactly were you doing with that money at the time? Because, I didn't even ask you yet if you had kind of read any stock market books or went on the internet and Googled some stuff, anything to do with the market. So I guess when you say you were in control of that and handling it, what particularly were you doing?
Well, yeah, from my perspective, we were talking like the early 90s, so I'm dating myself. But what I did do is I read a book by Peter Lynch called Winning on Wall Street, I believe. And I just kind of went into a lot of the Fidelity funds. I had a Contra fund, the Value Fund, the International Fund. So I spread my investing into those mutual funds at that time.
And this was all coming from just simply that book that you had read?
Yes. Yep.
And I always like to, you did date yourself a little bit, so I'm gonna use that against you here and just ask out of my pure curiosity. So 90s, when you wanted information there, that was straight up, you have to go to the newspaper, call up your financial advisor or broker. Is that how it worked back then?
Yeah, pretty much. Actually, what I did is I set up a 403B through my work because I was a public employee, and I was able to get mutual funds through that account that way.
Okay. So, but it was not like we have it now that, and like Ches and I are always talking about, we take a lot of stuff for granted because, hey, let's just roll out of bed, click on this thing called the computer that's connected to this thing called the internet, and we have all this information. I'm sure you have a much more probably deeper appreciation for how things are right now compared to how they were when you got started. Is it kind of mind-boggling from your perspective when you've lived through where it was then and where things are now?
It really is. Everything's at your fingertips. I remember having to drive to 3 or 4 pharmacies to get the latest Barron's, and read it cover to cover. And it's just so much different today. I can click on in the morning, and I have a couple articles I want to discuss with you guys today that I just talked about and thought about today. So from a fundamental standpoint, you're right. It's just crazy. I'm really kind of weak in the technical part, the stuff. That's why I kind of defer to you, and I'm learning from your aspects in that. But I'm more of I would say if you were to pinpoint me, I'd be a value contrarian with heavy fundamental research right now.
Nice. Well, sounds like we have some fun places to go as we get there. But we'll go back to the 90s for a little bit. So, I mean, you read the book by Peter Lynch. You diversify your money through a bunch of mutual funds. And, I mean, the money's there. Does this last for years upon years? Or I guess kind of pick things up from that point in your journey, and you can jump ahead to whenever you think it makes the most sense.
Yeah, absolutely. As time has rolled on throughout my life, I've been working like everybody else, and that account has transferred with me, and I've pulled it into different 401ks with jobs. It's currently in the job I have now. And yeah, that's my safety net, like a lot of people probably have. I've never ever touched it. And the other savings that I started creating on the side was what I started investing with in 2012 is when I started actually doing individual investing.
And I guess I'm assuming you had kind of rigorous criteria for what you want to do for kind of single stock purchases, things like that. I'm sure the books had to look a certain way and had to be trending a certain direction, stuff like that.
Where I started on the fundamental side is I did a lot of research on a company. I followed it for about a month, and then I purchased it, and then it always went down. That's kind of, I think a lot of people have that strategy, right? They read about a company, they read 50 articles, they find an entry point, they purchase the stock, and they watch it go down for the next 3 months. That happens all the time.
Yep, it absolutely does happen all the time. I guess, but the difference is that your outlook on these things, I guess, so say you're purchasing Netflix, what was your outlook on that? That's kind of is that a 5-year trade, a 1-year trade, a 10-year trade? I mean, obviously from the fundamental side, and, excuse my ignorance because I'm very far from the fundamental side of trading, but your time frame is not a shorter time frame. It's generally you have a positive outlook for a longer span of time. Is that right?
Absolutely. I look for a 2-year window. Basically, for what I'm doing, I will take a company that I look at, an RSI. I look at an RSI under 20, and most of the companies in that range are probably going bankrupt. But like for solar, for example, in August of 16, they had a really low RSI, which, you guys are the technical experts, but from everybody's telling me that means they're basically oversold. So I researched the company a lot in the past. The stock was in the 30s, started to purchase it, goes down into the 20s. That's where you have to, make your decisions. What are you going to do? And of course, everything in the company was solid. I didn't have any concerns about selling it and ended up setting up trades that executed at 65 and 75 a year and a half later. So yeah, it is a 2-year window for most stocks if you have the ability to sit like a ninja, if you will.
So I guess I want to kind of go back because I'm in Chez's camp. I know enough about fundamentals to do my my retirement account investing research, but I'm by no means what I consider myself a value investor or anything like that. But I do find it fascinating how it sounds like technical traders can buy, and then all of a sudden it seems like, oh, well, the stock just went down. And then here you are saying, well, when you're getting started, you would buy, do all this research, and then it would go down. So I guess, and I'm just curious, and maybe you don't remember, but while you were doing this research, was it one of those things where you're watching this stock go up and up? All right, let me do a little bit more research to make sure that it's going to keep going up, and then it goes up and up some more. I guess the shorter question would be, do you remember at all what the price was doing while you were doing all this research and reading these 50 articles?
Yeah,
and all
I
that?
actually have two, I guess you'd call them test cases of stocks that did the opposite, and I profited off both of them. Marathon Oil, fall of 15, was at 24. Read many articles. The CEO's buying the stock. There's a lot of insider purchasing. Stock was much higher. Oil's starting to find its support. All kinds of stuff. So I went in at 22, and it went down to 6. So that happens. What do you do? Well, I bought at 12, and I bought at 6. I averaged down and ended up closing the position at 18, making a significant profit. Another example is a stock called DDD. It was a 3D printing company. That one I purchased at 23. It went up to 96. It slid back down to 60. We got out at 60. So I didn't get the top, but again, doubled the profits on that one. So those are, it depends on the stock, I guess. Some, they could keep going down, as you know, for almost as long as you can stomach it. But other ones, they seem to have a lot of momentum, and I let it ride.
So I guess my question, that's kind of a nice little statement there to segue into this, is you have a 2-year window where you're looking to ideally make money, but do you have any sort of set risk, or is it literally, I'm either going to make money on this thing or my entire position's going to zero? I mean, do you have any risk parameters in place when you're doing this value trading, value investing? I would almost call it value long-term swing trading, because 2 years within the grand scheme of things is still only 20% of a decade. So it's not like it's super, super long-term, but compared to somebody that's looking to hold maybe 2 weeks, yeah, that's very long-term. So we'll call it long-term swing trading. So do you have any risk, or I should say maybe back then when you were doing that, how were you managing risk? Or is it just, hey, I can afford to lose all this if it goes to zero, so let's just see what happens?
Yeah, I did. I saw one of your shows on the partials selling, obviously, and that's something that I would be doing now all the time. I should have done it with DDD. It was at 95, and me and my wife were kind of discussing, closing out the position, and it probably would have been the wisest thing to do is to say, hey, let's close out half of it and then see what happens. And that's where my risk management level is right now. Is if I have a position like GE is down 49% in the last year and a half. It's been on my radar for a little while now. I entered a position at 15, but let's say you want to buy 1,000 shares. Start with 100. Watch the stock for another month, then buy another 100. See where it goes. This is kind of an exciting time for a value contrarian. The market's been up so much for so long. I'm kind of excited about some sale prices in the future.
Yeah, you're not the only one to say that either, because there have been a lot of people on the sidelines for a long time that are just kind of watching the balloon float away. But the difference is the people who generally get hosed are the ones that get impatient and, buy the top. That's just a part of emotions that'll play into just about any time frame you're going to try trading. So Clay was actually, obviously hitting on the risk side. I'm more interested in the exit criteria. So that seems to me, would you say that's just all discretionary in terms of when you decide to exit?
I've been improving that plan on myself. I used to have the all or nothing strategy, and I'm starting to set up trading plans. One of the things I wanted to talk to you guys about today was how I'm in the inner circle and how I use the power scans, because I kind of do something maybe different than most people. But I've been starting to set up trading plans where I give a specific date where I want to exit the plan, the supports, resistance, potential breakout, any other fundamental news. And from that, I'm basically 40 to 60%. If I can hit that range with a stock, depending on what kind of stock it is, and obviously there's many different parameters that might change that position. But yeah, I think that if you can do something in a 2-year time frame at 40 to 60%, you're doing really well.
Now you mentioned the different parameters. So what would be a parameter that's more so down at the 40%, and then what would be parameters that's more so up at that the 60% end of that range?
I would probably say, depending on the market cap of the stock and some of the movements, like GE would be a 40%, and then something like First Solar, which is a little more growth oriented, I would shoot for a higher return.
So basically, you're kind of looking at the volatility in a sense of just how fast or slow something tends to move based off the history of it. Because like you said, GE is what we would call a mud stock. That thing just kind of plods around. For it to go up $1 takes quite a bit of effort. And then a First Solar, I mean it's not like a penny stock where it's gonna jump up 80% in a day, but it can move quicker. So pretty much you're just the volatility is the main dictator between where that range is going. Yes, sir,
pretty much. And you talked a little bit about penny stocks. I almost never dabble in stuff like that, but I do have a couple of what I call swing for the fences accounts.
Actually, just out of curiosity, why not? Because we have a lot of people that do start with penny stocks, myself included. But you didn't.
In the back door. I didn't. Yeah.
Just curious, why?
As I, laid out my history, I kind of didn't. Penny stocks at that time were probably not as obviously as easily accessible as they are today, right? Because the internet. So.
That's a real good point.
Yeah.
Probably a mixed blessing too.
Because I know a lot of people get burned. There's no liquidity in the OTCs very much, and it's a pump and dump scam in a lot of cases. So I know that there's a lot of people that lose money that way. So I've stayed away from it.
Yeah, definitely. So, and we're not saying, and I don't think you're saying either, but penny stocks are right if you go into it with the right mindset and with the right understanding of just how it all works. And if you go in there with certain mindsets, which unfortunately a lot of people do, they think they're the Warren Buffett of penny stocks, and they're going to find all these blue chips, diamonds in the rough. They're penny stocks for a reason, and I'll just leave it at that. So Ches and I, we talk in the background behind because I definitely do want to hear about how we use the Power Profit Scan newsletter. But Ches, I don't want to steal your thunder because I was thinking the same thing. But why don't you go ahead and take this next question, Ches, because I am also interested in this.
So Dan, here's an interesting question that I was thinking of as we were kind of talking. What actually led you to join the Inner Circle in the first place, considering I don't believe Clay has a lot of videos on fundamentals or anything like that. Was it just a stock you were trading that you might have saw a video analysis on or something like that? What actually led you to join the Inner Circle? And it's just pure curiosity. I just really just want to know.
Yeah, it was what you're going to get is word of mouth. I work at a company, the large company, and one of the guys was more of a technical guy, and he came across Clay Trader, and he was just kind of showing me some of the candlesticks and buy, sell, open, close, high, low, all the things that dojis, everything that would pretty much take your mind and turn it into soup, right? For somebody that's never heard any of that kind of colloquial language.
Sure.
Yeah, some hieroglyphics for you?
Yes, exactly. So, it was somebody at work that kind of put me onto you, and it was something, like I said, I've never been involved in technical analysis at all, other than to average down and do some simple things and ride out any kind of storm. And I lose too, like everybody. I watched the video you had about being a good loser. It's important to know that at any time you could be, you could be down on several of your stocks, but up for your overall day. So, I also do shorting as a way to manage risk. I forgot to mention that.
Okay, well, you do all sorts of stuff. We'll get to that in a second, but I'm very you picked. Ches and I, we're supposed to be the one that kind of push our guest buttons, and we're supposed to lead them certain ways and all that. But here you are, you're pressing my buttons. I don't know if you pressed Ches's, but I have a feeling Ches is also very curious to hear how exactly you're using the Power Profit Scans. But before I get to that, real quick, for you listeners that maybe are not members, context, when you sign up for the Inner Circle, yeah, you get the chat room, but you also get a weekly email newsletter that I send up that I call the Power Profit Scans. It's got some chart setups on it, and then it's got some other dynamics part of that newsletter, and that goes out, every Saturday is when I usually do it. So that is what Dan is referring to. So Dan, the stage is yours. How exactly are you going about these scans?
All right. Well, before I get to that, I'll just say I like how you beat people up. I like how you're rough on people. As far as being brutally honest, that's part of the stock game that people don't know and don't pay attention to. They'll see 10 or 12 videos from somebody else selling something, and they tell them, everything's wonderful. I got a plan, and you're going to make money. Well, we know better than that. So I like that part of what you do. So that was why I purchased the Inner Circle. I like your power scans. I have never once purchased a stock from them. What I do is that's my paper game. I use the Inner Circle for my paper game. It's worth thousands of more dollars than the $99 I spend on it. So about 3 or 4 times a year, I will pull all your charts. I don't look at any of what the stock's at the time. So it's kind of, for me, it's a way to go through my process and see if I'm right, if I agree with you at the time, and then I'll go check the price of the stock 3 months. It's obviously 3 months later. So I love doing it. It's my training game.
That is definitely a very interesting way. And you made a comment. If I agree with it at the time. So given you're not super technical, then I guess what I'm wondering is, how could you agree or disagree with it based off of my kind of presentation is from a technical side and yours is from a fundamental side? Or are you saying that you're actually trying to make the decision based on the technicals too? Or are you applying your fundamental view to each of these scans? Maybe I missed, but I wanted to kind of get that clarification.
Yeah, I think there's only been one time in all of them that I've actually disagreed with you, and it wasn't due to a technical reason. Trust me, it was fundamental. Oh. So I do all of it. I will do the power scan, all of the information that you pull out of it, and then I do a fundamental analysis, and then I'll decide, what am I going to do? Am I going to make a purchase on it on paper, because I never do it for real. And here's one that I wrote. It was on TGD. It was 55 cents on August 12th of, I believe that was, I didn't put the year. It was a couple years ago, I think.
So you've been a member for for years then, huh?
Yes. Yeah. At least 4 years.
Really? Were you one of the first? Did you get lifetime membership?
Yes, I did. Yep.
So Chaz.
You're literally talking to one of the first 300 and you didn't even know it.
I did not realize we had a celebrity in our presence here. So you were one of the first 300 to sign up?
Yep, I believe so. Yep.
Well, but you got lifetime membership, right? So you only paid the $99 once?
One time.
And you've never had to pay it again?
No.
What, Chaz, I
love happy surprises.
I feel bad. Well, again, for you listeners out there, little context, when I first started the site, I guess going on almost 4.5, 5 years ago, I had no idea if it was going to work. I was just like, whatever, let's see what happens. I'll do this, $99, and and then all of a sudden people started to sign up. So I was like, all right, well, I'm going to cap it at 300. So after 300, I'm going to convert to a yearly business model because there are overhead costs and stuff associated with the business. But I thought, let's just do it yearly. So to know that, Dan, I want to thank you because I know what the website looked like when you signed up. So this was before IT Nate was on board, before Ches was on board. This was just, so thank you for the trust because you definitely had to have a lot of trust in me to sign up at that point in time, given the way the website works. So I thank you for that vote of confidence.
Yeah, you bet. It's worked and paid in dividends for sure, over and over.
Awesome. Well, that's great to hear. And that was definitely a pleasant surprise. Okay. And I totally sidetracked you, but TGD you said was at 55 cents, and this was like a couple years ago. So I'll let you pick it back up from there.
I did a 75-day out, and I agreed with you, and it went up 27% based on that model. I was just going to point out that I saved these little books, and it's a good training program for me. I basically forget a lot of stuff. Basically, look at it like I'm a private pilot. If I don't fly for a couple of months, when I get back in the plane, you oh yeah, I remember that. And that's the same thing with technical. I will literally go 2 or 3 months without doing any work, and then I'll go back to the inner circle, grab all these files, do a fresh up, because I bought your original candlesticks, the robot training, and I also bought the original options training. So about 3 or 4 times a year I do that to get myself stay fresh in the technical game a little bit. And when I retire, I'm going to go full blown with it, of course. But right now I'm an amateur. Let's keep that clear. You're the professional.
I play one on TV, but so do you have a full-time job? I would assume.
Yes, I do. Yeah, I work midnights, which makes it even more difficult as a trader.
Well, that just once again gives Ches and I more data and criteria in terms of there are no excuses. Yeah, if you wanna make it work, you can make it work. So I guess for you, it's not like there's an abundant amount of pressure on you. You have a full-time job, so this is all. I don't want to call it a hobby because it's more serious than that. But this is just kind of a part-time thing you have going on where, like you said, when you retire, then you're going to really ramp things up. Is that kind of a fair summary of how you're viewing all this?
Yeah, and it also kind of was born out of that savings plan. I started as a saver and trying to limit spending. I think people need to understand the savings spending association. It can't be overstated. It really can't.
No, it definitely can, and it's just with. I'm not going to go down the societal problem of credit and all that stuff. Anyways, you're absolutely nailed it.
I will because it provides a plug. Moneywithclay.com. This is exactly why I created in the first place, because to Dan's point, I mean, here we all, Ches gets it, he understands, but I mean, a lot of people, they don't understand savings, they don't understand spending, and there's just so much out there for it. So I mean,
arithmetic.
Yeah, and common sense isn't so common. So yeah, Dan, please, by all means, talk about saving as much as you want, because what a lot of people don't realize. And Ches, I want you to weigh in on this too, and Dan, you're more than welcome. But if you can't manage your own finances, because remember, we're all CEOs. What are we a CEO of? It's called our life. Yep. It's called our money. So whether or not you want to be CEO of a company, too bad. You are one. If you can't manage your own company, aka your life and your own finances, then please don't even try to get into the world of trading or investing, because this is a business too. I mean, I'm sure you've seen that, Ches. I know you are newer than I am, but I mean, you've now been around several years too. I mean, is that a fair statement on my part?
Yeah, but I think the common pitfall that we generally see is that, first off, people think, trading is easy and it's great. And the reason why I bring this up is because I make, say, $2,000 a month, but I spend $2,500 a month. So, that's definitely a red figure. I'm negative $500 every month. So I'm going to learn how to trade and make $1,000 a month trading, and then I'll be fine. But they're not. By no means do they look at the side of the equation where a reduction in their spending. They just think, I'll just make more money via trading, and then that minus $500 a month turns into, I blew up and now I'm minus $5,000 this month, and there goes my savings account. So people don't look at the one side of the equation, and I think that's what drives me nuts. I think trading is the way out of being red, but that's just me, and we see it all the time. But yes, people who start to realize it, and it was including myself, to the point where I knew how much, back right when I joined here, I knew how much every single one of my lunches cost to make based on my groceries. I had everything budgeted out. I'm a little bit more relaxed now, but yeah, I mean, that's how. And it wasn't that difficult to do. It takes a little bit of time, a little bit of, use a calculator if you need to, but it's not as difficult as you think. It's just most people don't want to change. They'd rather sit on the couch, watch Game of Thrones. Love the show, but sometimes it takes a little bit more effort than that.
And the final thing before we move on from personal finance is what Ches did is temporary. He's not saying, and I've been doing this for the past 7 years now, I got everything. No. When you're trying to get things on track, when you're trying to maybe, not that they're off track, but when you're trying to accomplish something, you need to operate efficiently like a business. Now, we're not talking about Congress. We're not talking about the government. And I don't care what side of the aisle you sit on. None of us are like the government where we can just hit the print button and, hey, everything's fine. So we actually have to be efficient. But what Chez is saying, yeah, it's kind of painful, it's kind of annoying, but it's all temporary. So I mean,
it was a necessary U-turn I needed to take, and yeah, by no means do I budget it out per meal anymore. But that was the spark that led to pretty much having enough to bankroll myself and take this trading endeavor seriously. So yeah, it's definitely not a permanent thing. You should always be budget conscious, but still, you don't have to be down to the meal and down to the ounce or anything.
Yeah, Chez, well, it all makes sense because I saw Chez golf, and I think this is a future fun fact. But Chez is very meticulous in terms of, all right, I'm into this. Let's get it nailed down. And it was amazing to see at the golf course the evolution of the swing in one session. But anyways, we have a guest here. His name is Dan, and he totally sidetracked us because he keeps bringing up
Dan,
these.
welcome.
He keeps pushing our buttons with the spending. So
well, if it also has good discipline points. I mean, like, let's say you have bad eating habits and you say, I'm just going to go on the treadmill 4 times a week. Just going on that treadmill makes you eat better. You think about that. And if you have the discipline to save properly, then you're going to be a smarter trader right out of the gate because you saved that money. It wasn't on a credit card, or you didn't do something stupid and go, okay, well, I guess if I lost it, I lost it. No, it took you a long time to save it. It was a lot of hard work, and you're not going to just, make dumb decisions with it. So that's part of it, right?
I was just, you could have talked for the next 3 hours. I'd have listened because I was 100% in agreement. When you can associate pain with a dollar, pain as an effort, then yeah, you're going to treat that dollar, you're going to cherish that dollar a little bit more than if somebody just hands you, some money and says, all right, go trade with this. Wait, and if I blow it, it's fine? Yeah, it's fine. Talk about setting yourself up to be absolutely reckless. But anyways, this is not, if there's ever a personal finance podcast that gets started, Dan, you're going to definitely have to be a guest because we could definitely keep on talking about this topic in and of itself. But
yeah,
we'll get back into trading. And you mentioned earlier about, actually, I'm not sure if you said you are shorting or you're kind of tinkering with it, but you mentioned shorting and as a way to manage risk. So I'd like to hear more about that.
Well, I probably misspoke about the risk management because I do set up trades fundamentally for everything. So, it depends on how you want to talk about that. But a couple of things that have come across me in the last couple of years, I have been hounding Tesla for about 2 years now. I think they're a poor company. They're $23 billion in debt. They have a higher market cap than Toyota and GM or Ford. They lose about $18,000 per car. The Model 3 progress is stalled at about 1,000 cars a week. The non-GAAP estimates are just tanking. Cobalt is going up, which is a main ingredient in their batteries. You could go on and on. The ZEV credits are running out. They were a luxury niche car maker, and now they're trying to enter a sedan market. I just see them as a complete, total failure. And
I got to stop you there just real quick because Jim Chanos, I read his article a while ago about why he's so short. To which everything I agree with. I fully agree. I think Tesla, for all the reasons you said, for why Jim Chanos, I think I'm saying his name right. I agree with everything. I think Elon is a magnificent salesman. Yes. But what's fascinating to me is, yeah, you listed all those things. I agree with. They're all very bearish. But these things have been around for quite a while now. And what has Tesla stock done for the most part? Just gone
it hovers up, yeah.
And
it's
up
got air.
and up. So that's why, and that's what makes the stock market the best game on earth, because you could have X, Y, and Z all being dripping with bear's blood because it's so bad. But then you look at the stock and it's just like, look at that thing. That doesn't make any sense. And Chez, is this a fair statement? And Dan, if the stock market made sense, then it really wouldn't be the stock market anymore, right? Because if it made sense, then it would always be predictable, and then it wouldn't work out. That's kind of accurate, isn't it?
I get people in the chat all the time, and it took me a long time to separate myself. They want to figure out the why. Why is it doing this? And how could it be doing this with exactly like you said, with all these bad things kind of hovering around it? And that's the beauty of the market. Me personally, I stopped trying to figure it out. I'd rather just run in the general direction of whichever way we're all trying to run and catch coattails and, ride whatever wave we're trying to ride here. But yeah, most people have the problem. And we're kind of taught from a younger age, though. It's nothing against this. It's just the way market and, auction theory and all that stuff works, is that, we're taught generally we like to, if something happens, there's a reason why. There's always a reason why, but are we going to be able to figure it out why Tesla keeps going up? I mean, people keep buying it. Their motivations are different than, whatever the stats are that we're listing here. So yeah, I personally stopped trying to figure it out, but most people get caught trying to figure it out and they find a reason, but then they're so gung-ho about it that they just let themselves get hosed on, say, a bad trade.
Yeah,
or
well,
something
because
like that.
Yeah, so I didn't mean to cut you off there, Dan, but I fully agree with Tesla, but then it took us down the rabbit hole of it always blows my mind.
It does.
How what seems like it's something that should be bearish isn't always bearish. So you were listening to all those bearish things. I agree. So I'll let you keep on going from there. And it sounds like, you said you've been, stalking Tesla for a while now. So proceed onwards.
Well, I agree. I agree with everything you guys have said. And it's not a good short, but I think it's a good option put, a long dated option put. So I love your course on options. I did the basic options course, and that's the only option that I currently own. I have a put for the 2020 out of the money verticals. I do, from 90 to 120, and I'm actually up on that right now. So sometimes, like you said, it doesn't make sense. I'm up on my puts, but the stock is up.
It's a great way to, manage your risk right from the get-go. That's for sure, though, just using essentially long options.
Yep.
Yeah, I'm looking at the chart right now, and I mean, it's pulled back a little bit, but I mean, you look at a longer-term chart, that thing is... It's sure is holding up pretty nicely compared to a lot of the bearish articles and supposed bearish fundamentals out there. But yeah, so I guess what you're saying there is a way you're kind of mitigating, controlling risk in a sense is you're just using options to essentially short Tesla.
Yes, and I also just did a pure short Friday of Sears, SHLD.
Good old Sears. Let me ask this: how much money was required to do your put on Tesla?
I did 10 puts, so we're talking $16K.
Okay, so all right, wow, all right, well.
But still, if you think of the equivalent in shares, that's drastically
true.
cheap.
That's true.
Oh yeah, it's so cheap compared to what it would cost in shares.
So how many shares is that, Ches? That's he said 10 puts, so that's 1,000 shares, right?
Yep. Yeah. So to have fun doing the math on that, it'd be a lot of money.
I do want to do the math real quick, just because it really goes to show maybe people zoned out. Oh, Tesla. Well, Tesla's trading for like $340 right now, so this doesn't apply to me. It does. The power of options.
So going long 1,000 shares would be $338,000. $338,000. So it's instead of 16,000. So, more than $250,000. That's to go long. Okay. So just if, your broker, I promise you, their margin requirements on shorting are different than going long. So yeah, that's more than $250,000 worth of stock. Essentially you are short right now for the cost of $16,000. So that's why I love options. If you know how to trade them, you know how to use them to your advantage, it's just such a good way to kind of utilize your money.
Well, I think a point with options... So
does that mean, and I'm trying to do the math on the run here, does that mean they were $1.06? No. 16? What am I? $16 when he if he had done one contract, how much would that have been? $1,600, right?
Yep.
So that means that they were how much per contract then? $16? Yeah. Am I right there, Ches, doing the math there? I'm trying to work backwards.
I don't have my...
So if he's got 16...
Yep. Yeah, 16. Yes, they were $16.
Yeah, 16. They're worth $16 per, and if he has 10 of them...
Yep. So each is $1,600, and then he's got 10. And then look at us. We did math, and it's $16,000.
All right, so there we go.
Oh, I just pulled it up. It's trading at 1771, and 1601 was the... Yep, 1601.
So since clearly Ches and I are not mathematical geniuses on the fly...
Dan's already up $1,000.
Good thing this is not the Math Reality Podcast.
That's true.
This would have sunk after week one. But the point here being, Ches already summarized it beautiful. Dan is, quote-unquote, involved with over $250,000 worth of Tesla stock for the price of $16,000. So $16,000, not exactly a small number, but relative to how much stock he's, quote-unquote, involved with, again, over $250,000. That is just the power of options.
All right, here's another one, too, Clay.
Yeah.
I currently have 11 things I'm trading. 6 of them are down, so I'm a loser. But I'm up $818 today. See how it works? Like you said, you got to be a good loser.
Now, okay, so you have 11 open positions, you said?
Correct.
What's the breakdown? Are these all options? Or are these, I'm assuming they're broken down between options and actual stock?
I think he only has options on Tesla only.
Oh, is that just the Tesla option?
Tesla's my only option. Sears is my only short. All others are long.
Okay. And so let's ask this though, because shorting, as you know, risk is theoretically unlimited. So you can't sit there and do the whole, well, it's either going to work or, it goes to zero like you could from the long side. So what is your risk criteria for this Sears short where you are actually short the stock?
I am interested, first of all, I'm looking at for a 20%. So right now I have the day off today, so I don't have to do anything, but I don't know if you like these or not. When I work midnights, I set up the trailing stop losses. Because I
like whatever keeps you the most disciplined trader possible.
Oh, we love those.
We all have different mind games. We all have different tools we can use to keep ourselves mentally sane. So yeah, if a trailing stop keeps you from freaking out, then that's good.
But I never stop looking. I guess I don't know how you want to mitigate risk, but I'm always looking to see where I'm at. Right now, the Sears, I'm up $78 on my short today, 106 on the whole position. So I don't know. It's at 235. I was in at 273. Once that goes below $2, I'll probably get rid of it, even if it's only been a month. Because
now,
go ahead.
So that's good. You obviously know where your target is. Now here's a question for you. So you have a trailing stop in. What are the parameters on that trailing stop? Like, what would Sears have to rally to essentially get you to cover and say, I'm booking this loss? Because if you set a trailing stop, your stop loss is in. I guess at what's the level you would set it for, though?
Right now it'd be 252. So it would be set at 10%.
Okay, so your stop loss is coming from just a 10% number? Okay.
Yes.
So what I'm going to challenge you to do when you go full-time with all this, because like you said,
Yes, I need help. Beat me up,
I'm
please.
not going to beat you up because
we learn.
You are managing risk, and that at the end of the day, that's the most important part. But when you do go full-time, one of the things you're going to want to do is to dig deeper into the charts and make sure that your stop loss is at a logical spot. Because if you just pick 10%, which you are now, don't get me wrong, for where you are, it's not like you're a full-time trader, or you've already mapped out that you
have a stop loss that makes us all happy.
Yeah, you had stop loss. But 10%, what you're at risk of is putting your stop loss at an area where from a technical perspective, it's like, no, that should definitely not be there. Maybe it should only be at 8% right now. Maybe it should be at 11% right now. And that's where a chart can really, you hear people use the word fine-tune a strategy. Yes. That's where a chart can help fine-tune you as a fundamental trader in terms of really precisely putting where a stop loss should be. So 10%, good starting spot, but when you do go full-time and you can really throw yourself into things like you said, that is going to be an area where I would encourage you to, where when you dig deeper into charts, you're going to see that charts are going to, show you more. They're going to help you fine tune where stop losses and stuff like that should be. Is that a fair summary, Ches, of, where Dan can go when he, eventually goes full bore in all this?
Yeah, absolutely. I mean, yep. I couldn't have said it any better myself. When you're going to go full bore into this, just, dig a little deeper, and all you're doing is just refining it and making it a little bit better.
But awesome. I guess, just out of curiosity, what was your reasoning for getting in? Or was it just simply because I like how you broke down Tesla, cobalt. I had no idea that cobalt prices were. Ches, did you know cobalt prices have been going up?
No, I've been watching a bunch of metal futures, but cobalt's actually not one of the ones I have looked at.
Not only did I not know that cobalt was going up in price, I didn't even know that was a part of a battery. But here Dan is. So I guess my breakdown Sears. Why did you even go short in the first place?
Sears has just sold off some holdings. They had a dead cat bounce from what I believe, about 38%. I read a few more articles about how the strategies they're using are just incredibly weak, just to summarize. And from that point on, I decided it was worth a try. I've done a few shorts over the years, not many, but I think, I try to look for things that are like, you got to be kidding me. That's absurd. Like in 2016, January, oil was at $20. Marathon, like I said, was at 6, the stock at the time. Of course it's going up. I just, you know what I mean? It's not that it's never going to happen. It's going to happen. And I just felt like when you get to a point where you see all these things line up, like the dead cat bounce, the retail market, what they're trying to do, the bounce from the sales, I just felt it was a good move.
So, and it makes perfect sense. And I mean, you're speaking like a true contrarian, and there's absolutely nothing wrong with that. I completely understand how you're kind of looking at these things and why you make the decisions you do, which is always important. As long as there's a reason, you're ahead of probably 90% of the people out there trading. But I guess how much do you weigh these articles that you read based on analysts and stuff like that? How much does that factor into your decision to essentially, go long or go short something?
I would say half of it, and there's just a gut feeling on some things. I mean, you talk about some traders that have been doing it for 30, 35 years. They kind of get a feeling and a sense for what's going to be happening. And I'm not there, obviously, but I think that if you go back to when you first started trading, and there's really it's hard to quantify this, but you had no idea what you're doing. It's like Clay had a video where you're walking around with a blindfold on. I can tell you that I still feel like I might need a pair of glasses, but I don't have blindfolds on, if you know what I mean.
Love that analogy.
Yeah, that's a good way to put it.
So fundamentally, here's a macro statement I wanted to throw out at you guys. These are I read this morning, some of the 2 most respected people in the world of trying to figure out the markets. We got Paul Tudor Jones. He's a hedge fund. Great. The markets currently, temperament feels like either Japan in 89 or the United States in 99. And the events have transpired so far this January make me feel more convinced than ever of this repeating history. Now you got hedge fund legend Ray Dalio saying, we are in the Goldilocks period right now. Inflation isn't a problem. Growth is good. Everything seems pretty good with a big jolt of stimulus from the tax laws. If you're holding cash, you're going to feel pretty stupid. So that's about as good as it gets for the fundamental world.
Yeah, I always, I probably don't read the articles, but I love going through the headlines. And I mean, at the end of the day, you just gotta you just gotta jump, whether that's in, whether that's out, whether that's over, under. I don't know, but you just gotta you gotta make up your mind at one point in time, or at some point, because I know, like you said, when you're first getting started, all you're doing is you have a blindfold on, and if you try to listen to everybody, I mean, all you're going to do is hear a million voices. You're not going to go which way to go. You're going to take a step there and then over there, and pretty much you're just going to spin in circles if you had a blindfold on. But at least once you get that blindfold off, like you said, are you still going to have 20/20 vision? No, but I mean, you can work on getting the quote-unquote glasses, like you said. Again, that was a great analogy. But yeah, in the world of fundamentals, and even in the world of charts to an extent, the problem in charts is a lot of people misrepresent what they are, and I get why they do it, but I can't stand when you're reading the headlines and, chartists say this is going to happen. It's like, no, nothing is going to happen. What you just said is the chart is basically telling you that there's a guarantee of something. And then when that doesn't happen, because there's no such thing as a guarantee, then everybody makes fun of charts and, these chartists, these technical traders, they're just gamblers because their chart said that was going to happen. No, it didn't. Anybody that makes you feel like a technical chart is a crystal ball that's telling you what's going to happen, they are misrepresenting it, and all they're trying to do is build a name for themselves, especially in the financial headlines, because if they get one right, then everybody says, the last time this person called it using the charts. It's like, well, yeah, but they weren't using the tool the right way in the first place. So just realize that charts are a tool to manage the unknown, not to predict the unknown. I'll say that one more time. Charts are a tool to manage the unknown, not to predict it. Because for every headline you have of one, every other, for one theory, you can find something for the other theory. And this is going to be pretty anticlimactic, but I apologize. We had an error with our recording software, and we lost everything from here on out. Not much left of the interview, but I do apologize for those of you that are fans of the fun questions. We did lose all of that, so I do again apologize. IT Nate, the show producer, is in contact, and he's been working with the software provider that we do use to record these podcasts. So hopefully this doesn't happen ever again. This is the first time it happened, so I guess we were on a good run, with well over 100 episodes until this happened. But regardless, we are proactively working to mitigate this from happening in the future. So I apologize, and we will get it taken care of for sure. Thank you again to Dan for being a guest, for taking time out of his schedule to do that. And if you want to learn more about Dan and his favorite movie, his favorite food, his hobbies, well then, hey, just ask him in the chat room. I'm sure he'd be willing to share that stuff with you. But sorry again, and before we go, final few things. If you are listening on iTunes or any of the other podcast players, please subscribe, especially on iTunes. If you could take the time to leave us a rating, that would be great. Really helps us out. If you're listening on the YouTube channel, be sure to check out the channel as a whole. We offer many different videos, live trade videos, quick tip videos. There's a vlog series. So lots of different stuff there other than just these podcasts. So hopefully you decide to subscribe to the channel, but definitely click the thumbs up button for this. And then finally, if you're listening at claytrader.com, click that share button, and down below this video, there is an area to leave comments. So you please, by all means, leave comments. We do read them, and we will reply to them. So thank you again to all of you as listeners. Thank you to Dan for taking time out of his day. We'll see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.